Good morning this Monday, the 25th of March. I'm Grady Wolf, market analyst with Bell Direct. Despite a mixed session on Friday, Wall Street posted gains across the three key indices for the week last week, with the Dow Jones recording its best week since December, and the market is on track for a fifth consecutive month of gains. Investors took a slight breather on Friday after a strong week for equities following the Fed's latest FOMC meeting, where interest rates were held steady again. The Dow Jones fell 0.77% on Friday, but added almost 2% for the week. The S&P 500 fell 0.14% on Friday, but gained 2.3% for the week. And the tech-heavy Nasdaq rose 0.16% on Friday and nearly 2.9% for the week. FedEx added more than 7% in the US on Friday after posting adjusted earnings that beat analysts' expectations, while Nike fell 6.9% on disappointing guidance and easing sales in China. Over in Europe, markets closed mostly higher in the region on Friday, even after stocks soared to an all-time high on Thursday. The Stoxx 600 rose 0.02% on Friday as tech and travel stocks losses weighed on market gains. Germany's DAX rose 0.15% on Friday, while the French CAC fell 0.34%, and in the UK, the FTSE 100 rose 0.61% at the week's end. The Swiss National Bank surprised markets on Thursday by lowering its core policy rate by 0.25 percentage points to 1.5%, which marks the first major economy to cut interest rates in a sign key global economies are winning the battle of inflation, and further cuts could be expected in the near future from other economies. The Bank of England held rates as expected on Thursday, however, signalled rate cuts could be on the horizon soon. Locally on Friday, the ASX 200 lost 0.2% as a sell-off in commodity-related stocks, particularly energy stocks, weighed on the key index. For the week though, the ASX 200 still managed to post a gain of 1.3%. Declining prices in oil, iron ore and gold were the drivers of investors selling out of commodity-related stocks on Friday. Fisher & Paykel Healthcare rallied 7.7% on Friday after the company upgraded its earnings guidance range to 260 million New Zealand dollars to 265 million New Zealand dollars, mainly due to strength in demand for the company's hospital product group and OSA masks. Ahead of the local trading session here to start the new trading week in Australia, the SPI futures are anticipating the ASX to open Monday's session just 0.09% higher. On the commodities front this morning, oil is trading 0.54% lower at $80 and 63 cents a barrel. Uranium is down 6.6% at $85 a pound. Gold is down 0.72% at $2,165 an ounce, and iron ore is up 2.77% at $111.5 a ton. One Aussie dollar is buying 65 US cents, 98.6 Japanese yen, 51.7 British pence, and 1 New Zealand dollar and 9 cents. And now let's dive into some trading ideas for your consideration today. Bell Potter has maintained a speculative buy rating on Deep Yellow and have increased the 12-month price target on the uranium miner from $1.81 to $1.90 per share, following the company's successful completion of Tranche 1, or $140.5 million of its $220 million institutional placement, with the remaining to be completed post a general meeting in April. Deep Yellow also plans to raise a further $30 million via a retail share purchase plan, with total funds raised to be directed toward the advancement of the company's Tumas uranium project in Namibia. And Trading Central has identified a bearish signal on Reece following the formation of a pattern over a period of 17 days, which is roughly the same amount of time the share price may fall, from the close of $27.65 per share to the range of $25.10 to $25.60, according to standard principles of technical analysis. And that's all for this Monday morning. Have a wonderful day, and as always, happy investing.